Hello and welcome back to Standard Bank Talks with Funeka and Montjane, where I'd like to think we explore the big ideas. I'm your co-host Ron Derby, the head of communications and reputation with Standard Bank's personal and private banking division. Today, we welcome back the star of the pod, Funeka, chief executive of personal and private banking, Standard Bank. It's been a while. What have you been up to?
It's been a while. I've been on maternity leave. And glad to be back with the team.
Oh, congratulations. This edition is our special Savings Month edition, and it centers on, I suppose, one vital question. How do we help South Africa's and Africa's middle class not just survive, but build wealth, security, and I guess a legacy? And joining us for the first time in this discussion is Zandile Makhoba, economist and lead specialist for research and insights at Liberty, which forms part of Standard Bank's insurance and asset management business. Zandile, sawubona, and thank you very much for being here.
It's nice to be here. Thank you.
Zandile, I'll start with you. You're the special guest. As Funeka has told you, you are the star here, and we just here to listen to you. Now, you led Liberty's collaborative research project, I think it was in February, with UCT into the working and the middle class, which was released earlier this year, the Majority Report. And in that report, it shows 14.8 million South Africans are in the working class, earning between 8,000 and 22,000 per month. What are their defining financial behaviors, and how do they differ from, I guess, the traditional middle class as we know?
So when we look at the majority, we're really talking about the mass market in South Africa. We're speaking to around 80% of the population, which is only accounting for around 40% of the total expenditure of the country. So you are talking about a segment in the economy that is in survival mode. They are trying to make the best of the means that they have, given the challenges and obstacles of the history of the country as part of that conversation. But what we're also seeing is that there is a very deliberate move in this segment towards middle class, towards upward mobility. And the paths that are being followed in terms of doing that include either upskilling themselves, finding solutions around their own survival in the informal sector, which we might talk about a little bit more a bit later, but a really resourceful segment of the economy, very creative just in terms of how they approach the challenges they face, and one that I think the bank is doing well in terms of not ignoring.
I'm going to ask a question that might be controversial. How big is the informal economy?
The informal economy today employs more than the mining sector in South Africa. And that is quite significant given that the South African economy was built on the mining industry. Over the years, its share of the overall GDP has declined, but remains a significant employer in terms of the number of people that are working in the sector. What's quite interesting as well, just to juxtapose the two, the formal economy is not just the absorption of unskilled workers. There is a sophistication in the informal sector that we sometimes miss. So it goes from, the lady retailing oranges in the corner to somebody who's actually a real estate agent and renting out rooms in the home to financial sector players in terms of informal and micro lending that you see in various parts of the country.
You've heard that the Khairi conversation with the Minister of Employment. What's your view?
It's easy to narrow the conversation and ignore the other pieces. But what I want to say is that Stats SA does two measures of employment. It is the formal employment that we see just in terms of people who are paying SARS and so on. And then we have the labor force survey that looks at every kind of economically active participation, right? Whether paid or unpaid. And that is a much more colorful picture. It's one also that can be overstated in terms of saying, when people are working to survive, it's very different from when they are thriving, even if it's in the informal sector.
So what is your thinking about this class of Funeka and its aspirant middle class as tomorrow's, I guess, as Standard Bank selfishly, it's what all private banking and the growth of that and almost beyond private banking. What's your take on this?
So I think at 10,000 feet, we're Standard Bank Group, we see 3 mega trends that we want to back. So the first one is the continent's growth, and we believe the East will grow faster than all the other parts. So we want to accelerate our growth in our East business. Secondly, energy transition or energy availability in our case, because across the continent, there are so many countries where actually we are underproducing energy, and the availability of renewable energy means that we can make much more energy available. And you can only look at our CIB results to see that we are doing that. And then the third one is this belief of unprecedented growth in disposable incomes of Africans. And so as part of that, you would have seen us talk about one of our greatest commercial priorities, our private banking. But private banking is a term that really talks to exactly what Zandile spoke about, which is this upward mobility, this abundance. When I asked Dai, our head of marketing, what does wealth mean? She said to me, wealth is the abundance of good things, which I think it's sort of, there's a tangible and there's an intangible to it as well.
Zandile, the report you'll be focusing on, shows the spending power of this working class has grown by 270 odd billion in the past 10 years plus. Where's all that money going? What are the risks if it's not channeled in the long-term value creation?
So there are various aspects here. One is that a lot of people are in survival mode. So a lot of their spending is about making it to the next meal. And so it's very hard to see sometimes that expenditure growth, especially in the context of rising inflation and that kind of challenge. The other part, though, is almost a way of them creating their own wealth channels. So there's nothing more entrepreneurial than our majority sector, right? So we've spoken a little bit about this informal sector, but there is a certain creativity there that we don't find everywhere else. Maybe it is also driven by this whole idea of having a lot of challenge facing you. So you are constantly in solution mode, and that part of the brain is constantly being flexed. We see people creating enough capital for themselves to build shops, salons, restaurants, buying equipment for manufacturing within the township economy. So there's also that complexity, right? There's that wealth or expenditure being channeled into creating opportunities for new incomes and developing new forms of wealth.
Funeka actually speaks about there's one critical problem, like rising costs, urban drift, digital exclusion. How do you think Standard Bank can tap into this growth engine while still helping with these underlying problems that this sector, this growth vector faces?
So, the bread and butter of what we do, as you know, as a banking sector, is to take the resources of the Republic and channel it to what we deem to be the most worthy causes. And one might argue that perhaps not enough funding goes into that sector, but we do want to look at it in the other way as well. So we recently, for example, published our partnership with Shoprite Checkers. And the dream for me for that, and I think we share it with our partner Shoprite, which is basically, how do you enable South Africans of all income, but particularly the majority that you talk about, to be able to stretch their rand? And that's really what we're about. So I think one of our key objectives across all is what is sometimes called money management, but how do you have more month left? How do you have a less month left at the end of your money? That's one of our core objectives.
Legacy, you and I we speak about it quite often, but it's also seen as kind of a luxury thing, just merely for the wealthy. But from your experience, what does legacy mean for this?
I'm with Zandile here in a sense that, there's different ways in which people build wealth and also in which they build legacy ultimately. And for me, two thoughts come. The first one is this idea that tomorrow is better than today. And that my kid, what I want for my kid is to live a life that's different to the one that I'm living. So I'm going to build skills, and more importantly, I'm going to throw money into this child so that their future is different. And I resonate with it. You know where I come from. I come from a village, Kwandebele, and I think that's exactly what happened, is that my grandparents put their heart and soul and every cent that they could. And it wasn't just me, it wasn't just them, by the way. It's the point that Zandile made about the communal nature. It was, in fact, everybody around me putting a lot of energy into it. So I think for me, it is that sense of tomorrow being better than today, often being represented by skills and education, and often not done by one person in the family, but being done by a community to be able to do that. And secondly, this is a DeSoto idea that says that poor people have property but not capital. Because how many of us, we're ekaya, when you go back home, you've built a house, but it's not titled. Yeah. And therefore you can't leverage it and you can't get cheaper financing. You're gonna get, when you want to build, you're gonna get unsecured lending as an example, which is a very different interest rate compared to what a secured lending is. Even many of us will do it for cash. Well, we'll do it and pay it off, but you can't quite leverage it in going into the future. So there's that factor as well. So I talk about there's a lot of undocumented capital that is in the majority.
Zandile, on the same element of legacy and building and importance in the segment.
No, definitely. I think there's that deep connection to the next generation, which plays a big part in terms of what people do and how they do it. And because you are dealing with a community that is really at the core of what scarcity is, sometimes difficult choices are made. You know, sometimes you have to choose between who you send to university and who you don't within that household. But investing in terms of business opportunities locally, and investing in their own ability to earn through education is distinctly a big part of their route towards upward mobility. And what is happening with those skills now is actually quite interesting. So one of the things we looked at is the difference between immigration potential in different segments that we deal with. And it's actually the middle and mass market that is more likely and open to the idea of immigration than we do find in our more affluent segments. This is now them seeing opportunities globally, whether it's nursing in Dubai or teaching in China. These are becoming really feasible options for people. And while it is a very difficult decision to make, leaving your family, the opportunity might be something that really catapults a community or a family from poverty into middle class. And so those decisions are made. And I think it's a nice challenge for us in the sector in terms of how we service a consumer who's very new to this idea of foreign and hard currencies, living abroad, transferring money, not from Gauteng to KZN, but from like China to South Africa, really partnering with them and making sure that they're able to achieve what they're trying to do.
Now, Zandile, back to you. Coming from your Liberty world, many people still believe like insurance in this market is mainly, we see the excitement around funeral policies. But how can we shift the mindset and almost position insurance as a tool, I guess, for wealth preservation and legacy building, and away from, we see the excitement around funeral policies.
Yeah, we do see that the way consumers use financial products sometimes really changes the landscape. And we can talk a lot about funeral cover and how people are using it as almost a way of saving and creating new forms of wealth and capital injection into their families. What we're also seeing is that because we are paralleling this this move towards technology and information, and this idea that everybody is now able to just find information or solutions online, a lot of people are not actually able to get the answers that they need because they are asking from a place of limited information. So a big part of our process around helping people and really creating a good foundation in terms of helping them build their wealth trajectory is the financial advisor model. It allows consumers to ask the questions that they might have on their minds, but also to start being sparked the questions that they might have never asked themselves. When you sit across a financial advisor who's got skin in the game, it opens your eyes to things that you might have not considered before. So our offering is very much along those lines. We want people to do financial needs analysis. We want them to unpack their lives, all the beneficiaries, all the, sisters' children that you're taking care of, and the uncles and the aunts, the unborn children. We want to really have both the past and future generations in that conversation as we help them plan their financial future. So it's not a one product conversation. It's really putting ourselves in that client's life and really understanding how the whole suite of what financial services provides can help them achieve what they want.
I mean, this resonates with me because to some extent there's a continuum to this. I do think that with what we call majority and maybe even up to middle class, I do think that we see so much more information around client transactions that we're actually in a position to actually make very simple, very targeted recommendations. But that requires digital inclusion, as you said, because the more we see what you do, the more a fuller picture, and we're able to say, maybe you could have actually done, and not just about interest, it's about actually, for example, if you use your credit card as opposed to your debit card, you'll get this discount. Maybe you should be able to do that kind of stuff. So I do think that the business that we have, which we call Standard Bank Connect, is just a center of that, of digital inclusion, because our objective is to put a handset, a data-enabled handset in the hands of every client across different income. Because I think that's a start. Because what you do every day, that's what actually sets the pace. And then Zandile is then right. There is a point at which now we need to sit down and actually have the right conversation. It is incredible how many high-earning people do not do this. And listen, we have fantastic bankers. But what I've found is that a banker paired with a fantastic financial advisor, that's the fantastic one. That is where you're actually going to get, that's what you get the most of. And it's interesting because, I mean, in my case, my banker, I've been with her for 20 years. And then we've got a scary financial advisor with all these targets that we've set that are always not always get kind of thing, right? But having said that, is that the pairing of them is what ultimately ensures that we are moving a step forward here.
I just want to jump on this point on the financial inclusion element. And I think it's one of the big conversations we need to have within the financial services sector, because there's a digital financial inclusion that needs to happen. And it's just such a nice way of democratizing access to this industry and the space. So we sit in a very special position in terms of having this mass data in terms of what consumers do and how they do it. And we have the opportunity to share that insight, possibly on digital platforms to help people achieve those budgeting tricks. We can see in terms of group behavior, what people could be doing to actually better position themselves. So I think we are in that special space where we need to walk the journey with consumers. There are many that are not completely ready for a fully digital environment, and we slowly take them along on that route.
Agree.
Yeah.
And so, Funeka, if you look 5 years ahead, what does success look like in Standard Bank's journey with the majority and the middle class, I suppose? And what's your vision for turning banking customers into wealth builders? And that's a big key thrust of your...
So let me say three things. I mean, firstly, we represent the entire pyramid. So the majority, the middle class, as well as the affluent, ultra-high net worth, all of those are our clients. I mean, we see the impact that some of the entrepreneurs that show up as ultra-high net worth, the businesses that they're running, the impact that they have in society. So we have reverence for all the client base. That's the first one. The second one is that we'll know that we are successful if we can numerically quantify how much wealth we've helped our clients create. And it's a very specific space. There's a lot of contribution that one can make in the world. We have chosen right now to be about creating wealth, which is a third point, which is about Africans across the continent being less of consumers and more investors.
Zandile, your final?
We are, as continentally, but also in South Africa, sitting at a space where the inequality issue is definitely a growing one and is creating political tensions, social tensions, and so on. The establishment of a middle class mitigates that so much. We are seeing that formally, a lot of the affluent segments are growing much faster than what we see in the middle segment. And closing that bridge is meaningful. It also allows for more opportunities to come up for the majority, those who are not yet employed. Being a financial services industry within that space means that we can assist, whether it be funding businesses and helping them be bankable, helping them create employment opportunities. I think we are an enabler to something that is already happening in the space, with the additional benefit of a hell of a lot of data in terms of human behavior and business behavior to help that whole ecosystem become much more improved. So yeah, I'm looking forward to us taking along that challenge and playing that role on the continent.
Thank you, Funeka and Zandile, for what has been an incredibly insightful conversation. If you found value in today's episode, share this with a colleague or a friend, and keep following Standard Bank Talk channels as we continue to engage on issues that matter most. Until next time, take care, and remember, wealth creation is not reserved for the wealthy. It starts with knowledge, consistency, and the right partner.